Hello and welcome to Switzer Super TV. I'm Peter Switzer and this is my colleague Paul Rickard. Hi Paul.
Hi Peter.
The big news is Medibank, so what's the offer? Summarise it.
Okay, the offer's been pitched at a share price of $1.55 to $2. At $1.55 it puts the company on a model of 16.5 times forward earnings, 21.3 at $2. That would see the company valued somewhere between about $4.3 billion and $5.5 billion. The company will pay a 4.9% fully franked dividend yield for the first 7 months. On a normalised basis, at a yield of about 3.5 to 4.5%. The offer opens on the 28th of October and closes on Friday the 14th of November. The final price is due on the Tuesday the 25th of November, and that's when we'll commence trading on the ASX.
Those dividends you mentioned, are they franked or unfranked?
Yeah, the dividend will be fully franked, Peter, but look, it's not as high as some people reported. $1.80 it equates to a yield, an ongoing yield of about 3.9%, so it's no dividend bonanza.
Okay, pros and cons.
Look, probably the couple of pros about Medibank, it's really a cost-out story. Okay, a lot of opportunity to get its what I call the management expenses down, and some work around its cost base in terms of how much it pays for medical relationship with doctors and services. So it's really about cost. It's also a company that's pretty much an annuity style of industry in private health insurance. It is a market leader, and it probably has still some opportunities in terms of products outside its immediate health insurance space.
The cons?
Well, a couple of risks. First of all, there's a bit of investment income is really important. Secondly, although it's got an opportunity around costs, you could say, why hasn't it done it already?
Yeah.
Okay. And thirdly, its main brand, which is Medibank Private, hasn't been growing. Most of the growth has been in its AHM brand, and that's sold through some of the competitor websites like iSelect, which has done really well. And there may be some ongoing challenges in health insurance, both from these sites and very much dependent on government support through, positive government regulation.
Yeah, and also the price is effectively set by government too, isn't it?
That's right, it can't really increase its premiums. They're all controlled by government. It does have a major risk if government was to lose interest perhaps or change regulation around private health insurance.
Final question, are you going to invest and why?
Look, I am investing mainly because it's the first privatisation of this government, and typically they've done pretty well. I think at around about $1.80 it's okay. It is an annuity style. There's not a lot of downside risk on the shares, but I'm not putting the house on and I'm not backing the track up for it.
Okay, fantastic. Thanks, Paul. That's Switzer Super TV. Thanks for joining us.